Okay, recording this video after close of trade Tuesday, 9th of August 2011. And what an absolute monster couple of days. Huge range, huge volatility, huge volume being traded. Must admit I'm not particularly enjoying the last couple of days. I was able to squeak out with 1 3/4 yesterday and 4 today, but yesterday I took 2 stopped out trades. Today I took 3, kept on trading through to finally make it out with 4, but just no fun for me, really no fun at all at the moment. I suppose there are ways of adjusting your trading style, maybe moving up a time frame. I'm still using 500, 1500 and 4500 tip bar charts. Maybe you could move up and your lowest time frame could be a 1500 tip bar chart, something like that, and using the higher time frame charts in order to kind of take your signals. But just extraordinary couple of days. Let me just recap and some thoughts on charts just after the weekend's video. So today we were one of these kind of reversal days. We were down at 1097 after the FOMC volatility and then closed up 1171, 4.7 million contracts traded. We still have to make this pullback to end of trend on the 45-minute chart. I keep on harping on about this, probably for about a week I've been saying this. Finally, looks like we're heading up to find that pullback in a downtrend. You can see here last couple of bars on the 45-minute chart, and we're kind of coming close to that cyclical cross. That'll be a pullback in a downtrend, and then we'll head down to an end of trend signal for a test into these lows. So I think general public are the first move is to start to get excited after today's activity, try and jump in first thing tomorrow morning. In terms of the timing I was talking about over the weekend with the sequence of events Monday, Tuesday, Wednesday, feel as if I'm kind of a day out, kind of shifting everything by a day. So we're kind of finding this pullback level most likely I think tomorrow, and then kind of maybe heading down on Thursday. So tomorrow might be an opportunity for kind of professionals kind of set up short for that final kind of test down. I mean, sometimes tests are really shallow, but the volatility has just been so huge over the last week that I expect that pullback to end of trend sequence to be fairly meaty in terms of distance covered. Where might we head back up to? I mean, we've still got the better exchange kind of trailing stop. Now this has been trailed down to 1215. So I think somewhere between where we are now and that 1215 level is the kind of area that it should start to kind of turn around. We could easily kind of poke through it, but kind of close below it on a daily basis. So it's that kind of area that I think that we'd start to see some professionals stopping the rally, and there'll be all kinds of Fibonacci type retracements. 50% might be psychologically an important point. Let's kind of see, just trade it off kind of the signals rather than try and anticipate it. I must admit, during the day I don't have a 45-minute chart open to look at that, but kind of trading off my tick charts instead. In terms of the longer time frame chart, this is the 40,500 tip bar chart. So on the weekend I was saying that potentially we had a setup for the end of this move, with an end of trend kind of setting up. We'd had our exhaustion selling kind of a couple of days prior. So just to recap, this is Tuesday's activity, Monday's activity. This is a close of Monday, open of Tuesday, and so this is the weekend. This is the close on Friday, the pre-open the Sunday evening to Monday morning, and then this is open on Monday. So we kind of, with the S&P news, gap down to 30 points on the Sunday evening. And I was thinking that maybe that was kind of a place that we might kind of rest up. We'd had professional bars kind of coming into the lows in that general vicinity. Obviously didn't hold. Tried to. We had all of these kind of bullish divergence patterns. But I talk about these, when you get divergence patterns, bullish and bearish, kind of lining up with, they're almost like in a straight line like this. You always get a final kind of thrust down, kind of shakeout move. And that was what we got. And so now I think we're in a better position with this sequence to pull back to end of trend. This one's a dirty end of trend because the pullback level was violated, but we've had this kind of exhaustion selling on Monday's activity, and after the FOMC kind of volatility shenanigans, flush signal right down here at the bottom with a Rambo pattern, so the amateurs kind of doing the wrong thing there. So potentially now this kind of races off. We've got this kind of exhaustion buying activity going on the 40,500 tip bar chart here, and so we've gone a little bit too far too fast. We'll see a divergence pattern probably line up with that 45 45-minute chart pullback level. So that's the kind of things I'm looking for. In terms of the hypothesis chart, I mean, this thing looks a little silly now, but the reason I picked this point was because this was a 10% correction from the Bin Laden high up here. So 10% being a technical correction. Typically, kind of market technicians use that, and what we've had is a 20%. So it's double that move, and 20% is a crash. So we've just had a market crash. So the question is, what does this look like? I still think, we're going to rally back to this general kind of area and then kind of take off to the downside. I think all of a sudden people are starting to realize, we've got some serious problems to fix, serious problems, and they're all related to debt, all of them. We went on a consumer binge for 30 years, basically. We've been on a consumer binge, raising debt levels, but certainly accelerated in the last 5 to 7 years. And we've rolled that debt because the banks we've refused to kind of write it off the bank's balance sheet. We've still got insolvent banks out there. We've rolled it on to all government institutions, all the the Fannie Mae, Freddie Mac, AIG, and the federal government, and not only here but in Europe to a massive extent. Look what they've done in Ireland, for heaven's sakes. And it's still out there. It's a question of what happens. Like, that's the biggest overhang. That's kind of, and all of a sudden people are starting to realize, we've not fixed anything in the last 3 years. So I think suddenly the realization of the severity of the problems is really starting to come to the fore. So thank heavens, because we need sensible people to do sensible things now. Carl Denigen had an interesting point. He was talking about, look at interest rates now, and where's the inflation? It's like, no one ain't talking about inflation right now. Deflation is the order of the day, especially when you see kind of rates like this. So what is this? This is the 5-year kind of rate down at 93 basis points here, kind of heading down. And we got a little bit of a ways to go, because we got, this is a better sine wave kind of cyclical moves on a monthly chart. This is a monthly downswing. So this will last a while. Then this is the 30-year. Same thing, we're in a downswing here. This was the panic in 07-08 in terms of what rates did, down to 3%. Well, we're heading down. We're at 3 and 3.5, 3.6 almost, rounded up, and we're heading down. And we've got a ways to go before the cyclical cross happens here. And here's the 10-year, same thing, 2.2%. And kind of record lows here. And exactly right, Carl's exactly right. No one is talking about inflation now. The bogey in the room has always been, the elephant in the room has always been deflation, and now the rates are really reflecting that. Swiss franc, just a quick comment about Swiss franc. This is just an unbelievable chart. Weekly chart here from the low in 2010. The move up here, I think, has been what has it been? 65%. Increase in the value of the Swiss franc versus the US dollar here on the futures charts. Just extraordinary. Back in the day, we were talking about those Eastern European countries that all had mortgage debt written in Swiss francs, and they were hit first extremely hard. I mean, it was a typical kind of thing. You could get super low rates borrowing money from a Swiss bank, but you had to do it in Swiss francs. And the Swiss francs have just gone crazy since over the last 3 or 4 years, and I wonder what's happening about those mortgages. Whether people are really, whether they were written off, or whether people walked away, or are they still trying to pay off mortgage debt that not only did the rates go up, but the exchange rate went heavily against you. So real worry there. But this thing's turning parabolic. So it's interesting to see the way that kind of plays out. In terms of day trades, 4,500 tip bar chart here. We kind of set off huge volatility, kind of pre-open, like in the aftermarket, and then the pre-open, this range was just unbelievable. And then we kind of topped out initially, had our exhaustion buying, bearish divergence, Rambo patterns here, pullback to end of trend, kind of dirty end of trend. The professionals kind of stepped in here at the pullback level and kind of rallied on, but weak buying at this point, and then we kind of crashed into this down move. Interesting spike. This is around the FOMC Rambo pattern kind of up, spike up, and then we kind of crash down. This one didn't hold. Normally with a kind of an exhaustion selling signal, bullish divergence signal, that end of trend would have been good. Well, it was good at least until the next cyclical turn, and then we kind of crashed down to this 1097 type level here. Just a couple of points. I'm starting to simplify my charts. First of all, you'll probably be confused to be seeing these signals on here. They're kind of signaling a bullish and bearish divergence, pro-signal exits, and flush patterns, and I've kind of superimposed them on my charts just to make things a little bit easier for me. I'm working on some revisions of the indicators, and so that's why I'm doing that. The other thing that I'm doing is I'm getting rid of a lot of the patterns off my charts, kind of no demand, no supply, profit taking, stopping volume, and so on, because frankly during the day what I really look at is the Rambo patterns. Of all of those patterns, the Rambo patterns are the ones that kind of stand out for me. So I'll tag on a couple of day trades maybe in a second video. I'm just exhausted with going through all of the information on the news feeds today and looking through all the charts. I mean, it literally takes me an hour to get through my charts just to have a look at what's going on, just because there's so much activity on a tick bar chart at least. Made a great little trade here, entered in long at, what did I get in at? 1118.50, which was pretty close to the low there, but I took profits for 4 points, and the thing went to 1140. That makes me laugh. Stupid. Basically I should be using a pro-signal exit to get out and then kind of leggy into this move. I got caught trying to get short way too early 3 times up into this move. Finally kind of worked out for me at this high kind of up here, and took an 8-point trade on the way down. That was at 45.50, so that was quite nice on the way down. Got 8, and that's how I ended up 4 for the day. But tricky trading. Should you be adjusting anything in your trading? I mean, the volatility is so high. I'd just suggest I'd still keep stops at 4. I wouldn't move stops out more than 4. You just have to be for the profit targets, because the risk, what I'm finding is I'm being taken out of my stop more frequently. Should be holding for more. So it was sensible to move that target out in my last trade to 8, and I should have been doing that kind of all along, basically for the last 3 or 4 trading days. But it takes you a while to adjust, and we'll have to see how the rest of the weeks goes. I mean, this volatility will start to settle down at some point, and quite looking forward to that. Anyway, hope your trading went well today. Again, getting this video out super late. Apologize for that, but just so much activity and so much kind of going on. So hope your trading's going well.